Good morning, everyone. It is Wednesday, May 12th, and this is Nadex Morning Analysis. I am Todd Rich with Nadex. With me, Brian Caprice from Keep Trading Simple. We are going to talk about some hot spots in the markets today, where you might want to be looking, where there might be some volatility, and we are already seeing some volatility. Before Brian and I get into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for anyone or everyone. That any trading decisions you make are solely your responsibility and at your own risk. And please do not construe anything Brian or I say as a buy or sell recommendation. This is an educational session. We are doing this for your education purposes. So what are we going to be talking about today? Well, the headline story, this is what everyone's going to be talking about right now, U.S. inflation numbers. We've been talking about it. The Fed has said we're going to be seeing some transitory inflation. People are saying we're seeing inflation. Everyone's sending off the alarms. Again, the Fed's claiming that this will be just transitory, that it won't be a long-standing thing, and they're waiting for it to show this. But inflation, it was previously 2.6%. They were forecasting it to come in at 3.6%. Where did it come in? This was 16 minutes ago. It came in at 4.2%. So we are starting to run hot. We are seeing some inflation. Now, what was the immediate reaction? Well, what are we going to look at? We're going to look at U.S. equities. The Dow immediately dropped, as did all the other indices. They're all trying to scramble back a little bit, but we'll take a look at the equity indices, specifically the Dow. What also happened with that? The dollar saw immediate strength. Brian will show you the dollar index. The dollar just took off. So what did we see? We're going to take a look at the Aussie dollar and the pound dollar. It's going to look a little different because the dollar's in the second position, but those immediately sold off with dollar strength. We're going to take a look at that. And then remember, this morning, 10:30 a.m. Eastern, oil inventory reports. We'll probably do a quick little peek on oil so that you could potentially look for an opportunity if there's going to be some volatility in oil. So Brian, let's first take a look at the equity markets, but I'll let you run through the inflation numbers.
Sure. Yeah. I mean, so yeah, like you just mentioned, we're seeing that over the 12-month, all index before seasonal adjustment was a 4.2%. As we mentioned before, there's we're going to let it go to a moderate level for an extended period of time. And we keep mentioning that sounds, or the approximation of that would be 2.5. Every expert out there has said we are seeing substantially more than that. The Fed is the only person talking about how it's going to disappear, but it's at 4.2%. And that's over the last year. So that's not even including the recovery and the pace that we're seeing right now. So kind of interesting. And it was being led by just the energy stocks or the energy sector. But now we're seeing it in automobiles as well, which is, again, it's carrying over to another aspect of the overall economy. Looking at the actual CPI rates, because those are the actual data, not just the consumer prices, you're seeing that the forecasts were 0.2 and 0.3. Mentioned yesterday that we expect those to come in higher. We said that even at a 0.5 or maybe like a 0.4, being double what the expectation was, that this would send the dollar flying. And again, it goes back to the same question of what exactly is the Fed looking at, and is the Fed now compromised? And I've said it before, it's not a conspiracy theory. There's actually other people out there that are saying the same exact thing. Oop, I don't need a live stream. You're seeing some information here. This is a news article that came out this morning talking about is the Fed endangering the dollar's global reserve status? It's one of those things. You got to kind of look at this. And, originally the things that we were doing in the beginning made complete sense with the pandemic. But where we are right now, again, here is the data. There is no question that inflation is creeping in. They threw a moderate without an actual number out there. This is over double what the actual mandate is. So the question is, what does it do? How can we make money off it? And again, this is why I mentioned that this was going to be the big reading of the week. Because again, one, the forecast was very, very low. But not only did it not drop like they expected, it was even higher than what it was previously. 3 times for core and, basically 4 times what the expectation was for the CPI, the regular CPI, and it's a month-over-month figure. So if it continues forward, like I said, we're seeing that there are more job openings. Again, they're like, we're not raising interest rates forever. This is bad stuff. So the Dow's response was pretty expected, right? Yesterday we had talked, and we were back in. Let's see, where were we? Yesterday we were sitting right about this level here, and we talked about how we were chopping back and forth on a level, and we'd like to see a clean break at the 34,237. We never got it. It ran into it a third time, and that was ended up dropping. And I did mention if we were able to break 33,997 that we'd be looking for this to go lower. And it did. It based right above, again, the telltale sign. We said if we get any basing in here, that's the trigger to get short this one. And it was very fast. It was 2 candles. And again, it turned at a level which we kind of expected. You see this little hiccup, this nice little push, kind of sideways movement, and then a punch higher. And again, that was the turning point. This morning, again, it's noticeably down. My data is a little bit delayed here. But again, this is the response you expected. Reason why is because, again, if interest rates are getting out of control, inflation is starting to go higher than expected. The way to handle that is to raise interest rates. Raising interest rates is not good for the indices because it makes lending more expensive. Again, you're seeing a lot of numbers out there. You're seeing Tesla down, Apple down. Nobody's really happy right now. NQ is down. Again, my data is delayed, but down 1.35%. YM is rallying back a bit, and again, that's what you'd expect to see. I would assume once a retail trader gets in here in about 40 minutes, we also see this to continue to push down again, but I will say that we do have some buyers sitting down there at 33,880, as well as another little hiccup right below that, and that level is sitting right here at 33,870. So yeah, we have a couple levels lower that we need to chunk through. The CPI data today is not great for overall indices, just in general. Again, the Fed can wear the blinders as long as they want, but the market can do what the market's going to do. Yeah. They see where it's going to come, and again, it's there's a lot of things out there with it, but it's not an overall positive sign. Looking at the 30-minute in the overnight, this little peak right here is where we started the European session. Make this a little bit bigger, right there. There's the European session move. So the overnight was already like, hey, listen, the CPI number is probably going to be good. And again, if you want to draw, if you're a trend line type person, I'm not necessarily not, but again, here's a high, a lower high, starting to push through that downside. And again, minus the actual news candle itself, you could do the same thing on the bottom. It's kind of forming that lower channel. So I would say right now, I'd remain probably more bearish, focused. I would say if we get a break of 34,100, there's a possibility that just, based off technicals, people look to go long. And then again, kind of the same play back in here again is a break of the 34. If we can actually kind of get that much ground, like I said, I don't think the retail trader is going to be very happy about that news, and I can see this coming back down and testing these, the buyers lower.
Yeah. Now I just want to flip something over, Brian. This is kind of funny because I've got slightly faster data. The need, if I'm going to come in a little closer so people can see it. That immediate knee-jerk reaction. That was this green. It's a green candle now. If you can see it, it's a very long wick. This is on a 15-minute chart. Immediately when the number came out, the Dow just it spiked down. It spiked down, and then it actually ended up being a green candle, which is very odd. And we're also seeing something right now, which you I think what do you call it? Do you call them hairy? Is that what it is when they've got?
Yeah, when there's a lot of wicks.
There's a lot of wicks. So I would expect. I mean, there's going to be some volatility in these markets. They're starting to just show up as hairy with lots of wicks. So everyone's trying to determine and digest the information. Interestingly enough, because we're catching up. This is real time. You're catching this real time, but a third of the inflation spike came from a 10% spike in the cost of cars. Yeah, it was autos. Used cars.
Yeah, it wasn't even new cars. It was used cars.
There's simply no supply of used cars. This is really rather interesting. So again, it's like trying to put some of these numbers in perspective. What is causing? I mean, a good third of it was just the used car market. So you see how one
it's a trickle down too. I mean, it's jumping. It's kind of like, it's almost like its own virus, right? We had energy up that was huge. It was up like 8 or 10%. Now we have the automobiles that are going over there. Start looking at housing. If you know anybody that's in the housing market right now, you're not getting asking price anymore. You're getting $20,000, $30,000, $40,000 over asking. So you're kind of seeing somewhat of an inflationary factor in the housing market too. And this is how things go. They said we haven't. It was in one of the other articles. We haven't seen a jump like this since
2008.
September of 2008. You guys know what happened in 2008, right?
It was not pretty.
Just saying. I mean, it's history. It's there. I mean, that's, you don't have to be a economist to understand the implications of seeing this kind of stuff. So
I'm putting my seatbelt on right now so I don't fall out of my
exactly
chair.
Right. Yeah, I mean, it happens again. But this is also why. And again, if you want to flip back again, looking at this, my chart is now, like I said, it's 10 minutes delayed. I don't pay for data on TradingView, guys. But you're seeing this spike back up again, and it makes complete sense why it's doing this. It's not. I mean, here's why. Everybody sees that negative number and the reaction. And again, if I go down to, I'll just go down to a 1 minute. There's the initial reaction.
Yeah.
The price jumped down almost immediately. Everybody sees that it's negative, goes, oh my God, this is horrible. And they start selling, right? They start hitting the sell button. Well, again, the second you start hitting the sell button, all of a sudden, price starts going up. You're like, how does the market know this? The market's not dumb. The market knows. So this is why when I mentioned about the best opportunities, there's a session opener, there's a pre-release, and again, you got to see what the market is doing, and then there's the retracement after the fact. So would your trade in this one have been to go short after seeing the number? No. It should have been going long. And the reason why is we drove right down, we went into an area, or really close to an area where we had sellers, and once it stabilized down and was unable to go any farther, there's your trigger to go long. And the reason why is because every retail trader in the world knows that that's a horrible number for the indices. So what do? They hit the sell button. But that sell button was letting all the other people in here, it was letting them get out of their trade so they can get profit. So this is why this is how you take advantage of kind of what options can do for you, is you can get limited risk, assuming that this is going to be a big jump. And again, we've talked about it. All the experts out there. I mean, when Uncle Warren says something, you guys should listen, right? We're seeing inflation across the board, right? So what would have been the, again, think about this. You can go back and look at the smaller, duration binaries right now. Go back and see what the strike differential is, assuming that there was a big CPI number that we were expecting a drop, which we've mentioned all week and many other people out there have. How much did it need to move to jump 2 or 3 strike prices to the downside? Look at that. Could you have taken it out of the money with a little bit smaller risk? And again, drop into the small little 2 hours.
And this is the 8 to 10, and just so you can see, this thing dropped 1, 2, 3, 4, 5, 6, 7, 8 strikes.
Almost 8 before the release. So if you were 3 or 4 strike prices out, taking a smaller risk level of between $15 and $20, in 1 minute it drove 3 strike prices past where your strike was. If you're risking 18 and you could take it off and it was 3 past, say you took it out at $55 or $60, you're risking 18 to bank 60 on the back end.
Yeah,
that's a good risk reward based trade in less than 5 minutes. So that's how you do the pre-release, guys, in news.
That was a move. Markets immediately digesting it right back to where we started. Okay, yep. So anyhow, that was fun with the immediate reaction to the inflation numbers. Of course, we're going to see what happens in 30 minutes when everyone starts getting in, and then, of course, when the news reports all start coming out and all the talking heads stir the masses. We'll see what happens. All right. You know what? We're running out of time here. We spent a lot of time with that inflation number in the equity indices and the Dow. Yep. Let's just take a quick peek, because the dollar.
Mm-hmm. Yeah, I'll give 2 quick examples of the dollar. And same thing.
Let's do that.
This was a huge retracement down, right? We saw 50 pips, and then in less than 30 minutes, we're right back to where we started. And it's the same thing. So yesterday we talked about
this is the Aussie dollar.
This is the Aussie dollar, and I mentioned that the Aussie dollar we want to look at because, again, gold, right? 78.21 is what we told you guys yesterday, and we were sitting right here for yesterday afternoon. Reason why? Again. Here was a level formed. Here's 1, here's 2, here's 3. What magic number is this? This is number 4. There's your base in the very, very bottom. So your trigger was definitely in as far as, hey, listen, we're basing in the zone, go short. Well, the immediate response down, and remember, this was a 6.1, the 3-to-1 risk to reward ratio trade. Oops, let me move this side, was sitting right there. So there was your trade setup from yesterday going short. It obviously went past. We talked about the opposing zone being much, much lower down here. So had you kept the trade on, again, it came back up, you were stayed profitable, and then bam, we collapsed right through. This was your profit target, not a place that you were looking to go necessarily long in because it was the opposing zone. But that was a 6-to-1 trade, almost 7-to-1 trade. Actually, if we take the full movement of what the spike just occurred, it was a 9-to-1 risk to reward ratio trade. So again, great movement. I would expect this to go back down again. Again, this is the initial response, ran into a level on the far side of it, and then retraced again. This is called profit taking, especially in the currency realm. But it is such a strong number. The currency market tends to be a little bit, I don't want to say progressive, but they tend to be a little bit more advanced than the overall stock indices because it is on a global basis.
Yep.
Overseas, they're looking at this saying the United States is crazy. Their CPI, all their stuff is going up. They're definitely going to raise it because that's what the rules are. That's how things function. So I would consider this one to be also kind of in a bearish mindset today, and a number of different ways to play it. Eurodollar is basically in the same situation. And funny enough, look at this.
Wait, hold on. Hey, 1 second. I just want to show people. Hold on. I just want to give everyone a quick peek, because again, it's a learning opportunity too, and I do want to definitely emphasize this. These were the 2-hour binaries when that number came out. So when this Aussie number came out, when it came out, the Aussie dollar did drop 1, 2, 3, 4, 5, 6, 7. It went through 8, and then we had no strikes down below. I mean, we didn't even have it. Went through all of them. So there was definitely an opportunity in here to trade these binary options and scoop them back. Just so you could see now that we've just listed the next set of 2-hour binaries, yeah, we've got a lot more strikes in here. I mean, these strikes down here weren't even available because we just listed the next set of 2-hour binaries. But as Brian's mentioning, if you look on the platform on the left-hand side, check these shorter term binary options. We even have 5-minute binary options. Kind of that can be a little bit more difficult. The volatility in there is crazy, but these 2-hour binaries, definitely something to be looking at around a news report like that.
Yep.
Sorry, Brian. Yeah, let's go right back to it.
Yep. Here's the Aussie dollar, guys. 2-hour, right? These are 2-hour binaries, the 8 to 10 a.m. this morning. And this is where I talked about when you understand where the high volatility releases are, you can take advantage of this. So doesn't really matter if you were on the top side or the bottom side in this case. I mean, again, this is a 5-minute chart. It had been trending down. We had pulled up and gone right back into a zone right before news, right? Here's where the news came out. Could you have grabbed this one? Absolutely, without a doubt, right? Had you taken this one short, even if you had gone, say, 4 binaries, right? 1, 2, 3, 4, price was probably very, very cheap. There was only 30 minutes left to go in that one. I'm sorry, it had basically an hour and a half to go, so we had some time in that one. And again, you could have done it with the 8, the 7 and 9 as well.
Yeah, and by the way, there is one really important. This is really important, and I actually see it in the chat right now. And I want to call out. It's Ernest calling it out. These only work.
My students.
Yeah, hey, Brian, your student is stellar. He is stellar. These only work if you set to take your profits as well.
Correct. Yeah, that's what the point
is. The binary option doesn't mean you wait. If you put this on and we're waiting for it to settle, you saw it completely retraced.
Yep.
So with a lot of trading, just because there's an expiration with options does not mean you need to wait until then to see what happens. Call spreads, knockouts, binary options. If you're looking for a high volatility move and it moves and it goes your way, you do need to have an idea of when you would exit it for a profit and say thank you very much, because the market will do something else. And you set that as an order. You don't do it manually because it can happen fast. You set it in the system so you can say, hey, listen, if price gets to here, I want to take my profit target. And that's kind of what I'm showing here is, had you gotten this here, right, when it came up, you're like, oh, listen, it's 5 minutes before. If I can take $17, $18 risk and put it down here, could it move that way? And again, this is why you have to know your news releases. You set it to say, hey, listen, I got in for 18. I want to get 3 times my money out of this one. Let's set it for, I don't know, $60, $70, right? Yep. As this spike happened, and again, this is a 5-minute chart, so you have less than 5 minutes to do this. As it spiked all the way past and again blew out all the binaries in the 2 hours, it automatically would have taken you out of the trade with your profit for a 1 to 3, right? But here's the best thing about it. What if you guessed wrong?
right? What if you had gone long and say, hey, listen, it's starting to rally back up again. I think it's going to go long. It did the same thing up top, right? 1, 2, 3, 4, and done this. When it dropped down, it did not take you out of the trade, right? Because the most you can lose is the cost to enter the transaction. Okay. This is a retracement. This is one of those examples. It doesn't happen all the time, but nothing would have happened when it went down. But when it turned and retraced, 20 minutes later, came up, you would have still gotten taken out on the top side. So it's not only about picking the right direction. And again, you have a little, if this was a knockout, you would have been taken out. The binaries and the call spreads did not take you out of the position. But this is why it's so important and why I love news trading, knowing that this is one of the top 5 news releases and has the ability to move the market tremendous amounts in a very short period of time. This is exactly why I feel you don't need to be here for 18 hours a day staring at your computer screen. If you know when these high quality news releases are, and especially something like CPI, when inflation is on everybody's tongue right now, everybody's talking about inflation. This is the number one, basically gauge of inflation out there. Guys, this is how you do it. Get in there. You could have gotten in 10, 15 minutes before, looked at those shorter duration binaries. They got the tiny strike width, said, hey, listen, it's pulling back up into a zone. I like that. I'm going to go short. Set your profit target, and then go get coffee and come back and be like, hey, I'm green. I'm out for the day. And again, you don't have to be here. You don't have to have the emotions. And again, let the machine do the work for you.
Yep, perfect. All right, we are actually going a little long today, but I do want to wrap up. We did some great educational stuff. I mean, this is really important because the event just happened, and we don't get this opportunity all the time to talk about it. So if you didn't listen to the whole episode today, definitely go back and
by the way, parabolic retracement.
Yeah, I know, right? There's just so much in there. Let's just touch quickly because oil inventory reports are coming out at 10:30 Eastern. Mm-hmm. Now, oil's in the news mostly because people on the East Coast are starting to struggle with gasoline. We're hearing about it.
You make it $4 a gallon. Of course, we're struggling, Todd.
People are lined up to get gas because they can't even get gas now. Let's just take a quick peek. Are there any technical levels in oil to be looking at going into the oil inventory report at 10:30 this morning?
Yeah, so what we're going to have to do, and this is a level we had yesterday, that's 65.81. If you see that, here was the European Open. And again, this is if you attended last week's session, you guys already got this trade this morning. If not, go back and watch the session. Here's the session open into a 30-minute level that we mentioned yesterday. Was a drop of 80 cents in the European session. So right now, this is what we have for the European session. You can see it's a little bit, I would say it is definitely a day of movement. So, right now, you can see when we've done this in the past, you have one of the 2 sessions kind of doubles or is a little bit more than double. This is kind of I wouldn't say it's the extreme, but it's one of those ones where it looks like it's a lot of European-based movement. It tends to be that we don't have as much movement in the U.S. session. I would say 66.60 is a level to watch out for. We got an hour and a half to get there. Obviously, the CPI data is going to matter. What we're going to need to do at this point, because we have kind of pushed through a level, it is pulling back and it is looking like it wants to go higher right now in the early morning session. And again, with CPI going higher, economy better, that means kind of the inflation and things like that are looking better than expected. I wouldn't be surprised if we go higher. I would say 66, 63. It's a level where we've had some selling coming in before. Above and beyond that, it's up here at 67.29, which is far. So I would say the same kind of people, the same sellers that are stepping in right in here at that 60.70, I would say they're probably what's to watch out for. But the way to play it now, because there has been so much movement, I would say at about 10:15 this morning, drop this down to a 5-minute chart and see if we're just going to have sideways basing or if we have an area where we have something. On a 5-minute chart, you can see that there was an area there. And again, CPI bounced off of that already for news. If we push back down, that could be a level. We can see one down here and do the same exact thing. Drop down, look for a level of stabilization that has a nice little pop off of it. And again, look into potentially a pre-market move. CPI is going to dominate this morning. And like I said, this is a substantial amount. It's not one of these like kind of flat, kind of back and forth levels. Again, this was down and all the way up. So, I mean, its breadth was pretty big on that one. So just be cautious today with that one.
All right. So one thing I do want to point out real quickly, my typing skills might not have been perfect there, but if you want to know how you set an exit position, once you're into a trade, or let's say you bought something, you can
just click on it and it reverses it.
Yeah, you can click on it and you can set. You can click on your position in the position tab, Or you can just put an opposing position. If you bought it, you can say, I want to sell it, and change the price to the price where you would sell above the market, higher. If you were short a position, you sold one and you can put a position to buy it lower. And if it trades down there lower, you might end up buying it lower. So you can put positions away from the market. We have a central limit order book. You can put offers above, you can put bids below. You can even put something between the bid-ask spread if you wanted to. But you can place orders away from the market so that if you bought one and it were to go higher, if it, you bought it at 20, I'd sell it at 70. You can put an order to sell it at 70. If it goes up there, you'll sell it at 70. If you sold one at 70 and wanted to buy it back down lower at 20, you can put a bid down below at 20. And if it does come down there, you might buy it. So
yeah,
you place an order away from the
practice
market.
that in demo first. If you're not 100% comfortable with it, switch over to demo. Just throw any position on right now, and you can even put an easy way to do this. If you guys want to learn how to do it in demo, is use the Eurodollar and pound dollar. So you kind of have two opposing views. So one of them will definitely trigger today. Buy one of them at market right now. Sell the other one, and then what you do is on those two tickets, click on the ticket, and then change the profit on it. So you can say, hey, listen, I bought it for this. I'm gonna capture it for this. And do one long, one short. It's demo. It doesn't cost you any real money to do it. And again, typically one of those, pound dollar, euro dollar, they should move kind of almost the same way today. And that way you have the ability to kind of practice it in a safe environment before you go and put live money in there with kind of reversing and learning how to take profit targets.
And by the way, we are coming with some functionality. You're going to get a close position button on our positions page soon. So you'll be able to simply click close position and it'll populate a ticket to close your position. And soon as we get that released, we're actually going to put in a set profit button. So it will help you do that. It's coming. It is coming. And you push the button and then you pick the price you want, and then you could submit your order. But we're trying to make it a little easier and a little bit more intuitive. So it is coming your way. With that, if you got any questions for Nadex and you want to know more about that, you can certainly email customerservice@nadex.com. That is all coming your way. If you got any questions for Brian, please email him, support@keeptradingsimple. He is definitely available and accessible. With that, what did we talk about today? If you want to go back and play the session, it's about inflation. Inflation is definitely poking its head up. We saw an immediate reaction in the equities. They sold off only to rally back, but there was definitely some trading opportunity. It saw immediate dollar strength. The dollar spiked, but it also pulled back a little bit. So we're seeing volatility in equities, in the US dollar. And then remember, 10:30 a.m. this morning, Eastern time, the oil inventory report, we might see some volatility in oil. We might not, but it's definitely someplace to keep your eye on. With that, I want to thank you all for joining us this morning. We will catch you again tomorrow morning.